So portfolio, unbelievable week in the portfolio, right? It's 7% on the week. That's pretty much the best week I think I can remember running this portfolio. I mean, what can I say? Our biggest position was short vol, and short vol worked spectacularly this week. And then volatility, the Vega book is the one that cleaned up, right? So if you look at our closed trade P&L, that's about 3% positive, and then our Vega open P&L is nearly the same. It's about 4%. So we've made about 7%, pretty much all coming from Vega, which was all our short VIX trades, right? So we had a combination of VIX positions that you guys obviously are all aware of and know about. If we go through the list, we had VXX put spreads to November, which we spent 50 cents for. We got out of those at about 170. So those made, 200% plus. And we spent about $1,000 on those. So decent money on those. We had SVIX calls naked, which is the short VIX ETN. We spent 25 cents for those. SVIX obviously exploded through the strike. We got rid of those at one and a bit, and we rolled them up to the 30 strike. So we banked like a 300% return, and we've still got upside in case the SVIX wants to continue rallying into this Friday, right? So there's potential. You know what OPEX is like, right? Often into OPEX, you get a big crush in vol as well. If that was to happen, given that Thanksgiving's coming up as well, you might see SVIX go through 30. And if it does, we'll make some more money on that trade. So I didn't want to give up everything on that trade. I wanted to maintain a bit of upside, but take a lot of money off the table. So we banked most of the money, but we rolled a few of those up. And then what else did we have on? We had a 15 put in December against short call spreads, 25-30 strikes. We've covered the call spreads because they were only worth 10, 15 cents. Bought those back. We've still got the 15 puts. We're running those for now. And then we had the reverse put calendar long the deck 16 puts against the January 15s. Out of all the trades, that's probably the one that's performed the worst, just because the January puts have made money as well, have lost money as the deck puts have made money. So that's a slow burner, that trade. If the curve really steepens, which it may do, like if vol gets annihilated into Christmas and the curve really steepens and we go to like a 3 vol steepness, which is possible, I've seen it before between Dec and Jan, then this trade will come into its own and probably make another vol point, right, or close to that, which will be like $3,000 in the size that we've done, right? So that it made no sense to unwind that position. It's a slow burner. Let it do its thing. Don't need to touch it. And if we do get a trend lower in vol, this thing's going to kick in and accelerate and make some decent money, basically, right? So happy to let that run. So you can see I did a blend of positions to express my short vol view because I didn't know if we were going to get a contested election. There was clearly a scenario for vol to get smashed this week. That's what actually happened. But there were other scenarios where vol would have taken some more time. So the trades that really cleaned up and gave me leverage to that sharp, fast vol crush, those are the ones that I've banked. The other stuff that's a bit more slow burning, I've let those run, and I'm happy to let those run, basically. Okay, so that is the thought process behind what I've done there.